Man, I sure love this stock. Holy crap. About 6 months ago, I got absolutely uber bullish about Japan. And it turns out Japan's just going crazy now. I mean, you can make the argument that you can actually come in and buy Toyota Motor Company at basically the pre-COVID levels there. Like a lot of these US stocks, I mean, they just went absolutely insane and they never came back down to earth. This guy actually looks like he's come back down to earth. And Toyota here has been working its butt off to try and develop a hydrogen combustion engine. The worst part about this trade, however, though, which kind of bums me out, and I sure hope I don't miss it, but you can see here is just off the daily charts. If we do reload zones, you can see exactly where we're supposed to be buyers. There is the daily reload zone. And look at this pretty little W that just came in right through there. So on the daily charts, right, you can clearly see where, and you can see, look at all these damn W's. Like there's one that came in there. Look at this little W right down in there. Oh my goodness. And then I think this sort of coup de grace is this W here. Now, if I wanted to buy this thing, I think what I have to do, especially considering it's May, June, right? Seasonally, this shouldn't be, uber insane bullish. But, if this thing goes and it doesn't come back, well, then I missed it. But what I'd like to see is, can I please get a nice pullback into this reload zone? And I'll be happy to go and buy some down here. Market's up, fighting with the 200 period moving average like a dog here. And hopefully what you see is there's also this really big W. Like, look at the size of that W. Ay caramba. And that's actually confirmed, eh? So you can see we actually did trade through that. So there's a lot of bullish anecdotal evidence off of this. This is the daily chart too. I remember about 6-8 months ago, I was going on with you guys. Holy crap, Japan's such a buy. So, the moving average system, right? If we think about bottom end of the range, top end of the range, the scoring system, you can clearly see a huge sell signal there. Top end of the range, moving average crosses, and look at what happened. Kaboom. But notice, oh, hello, what do we have there? And, as I had said there earlier, is this in a reload zone? Oh, son of a gun. Pretty much. It's pretty close. So, I guess it shouldn't surprise us. Then on top of that, like I said, beautiful moving average break here. Moving average, sorry, trend line. Market structure, give me a W on the other side. Where's the W? Oh, I guess it's over here. If anything, kind of cheeky of Wall Street that kind of froze us out here. But I definitely think that this is working now. Something like boom, 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 boom. So if that's the case, then our price objective should be from the top of the head. And if you don't know this, write this down. I mean, that's the whole point of these exercises, right? D-Max feverishly taking notes like he says. Back to the neckline. So there's your measuring part of the move. And then we just extend that off of the neckline. So, and also too, you can see there's some nice gaps up here that need filling in. Oh, hell, there's a gap all the way up top there. But I think it's probably pretty good odds that we're going to rally up into that level there. So inverted head and shoulders is. Suppose we could probably start painting things like Foggenbaums. All right. So interesting. We're coming up into that level. Remember, we talked about options expiry on Friday. Could this thing, work its way up into this level into Friday and then into the end of June, something along those lines? We have a pullback into support and then set up the rally into the fall and maybe even set up like a divergence on this move here to set up some sort of short this fall. Definitely. I think that makes perfect sense. So that's kind of the scenario that I see. Sell in May and walk away. I don't know whether it's a good idea to step in front of this here. Because of the options expiry this weekend, I think there's a lot of incentive for them to get the market up. Once that's out of the way, then we probably pull back and then play the games where we pull back and then maybe we have like a little counter trend rally into the middle of June around that FOMC event date, maybe something like that. Then maybe a dump into the end of the month, July 4th holiday weekend into moving average support. And then we get ready for the summer rally following that July 4th weekend. We'll see how it goes. I mean, I don't think anybody's really good at predicting the future, but if I was, maybe it's something along those lines. I don't know. We'll see. I don't actually even think that that's really that good of a buy. But what do I think is a good buy? Well, we want to try and hunt for those weekly W's. You've heard me talk about weekly W's, and look at that. Bang, 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 yang. I mean, just absolutely textbook. We talked a little bit, and actually, I'm kind of doing this backwards, right? We should start off with, well, we should probably try and wait for reload zones. Don't get into the habit of chasing these markets up here. Be patient and disciplined. Wait for the markets to pull back. Of course, we all know good old Brian's BFF. So at that level, we probably should have been paying attention anyway. All right. What a surprise. Look at that bottom right off that darn BFF. And also, too, if we look back, we would have gone, well, all these gaps need filling in. That gap could use a little attention. Mind you, it does look like it's filled in. This gap looks like it was filled, but this is a gap. And actually, this is a cheeky one, right? This would be like your candle bar gap, right? If I change this to a bar chart, watch how, where are we here? Watch out. Now you see the gap. Can you see that? So this is why it's, people love candlesticks and it's totally awesome, but sometimes it's actually in your best interest just to change the picture a little bit. So this is a bar chart. This is actually where I first learned technical analysis. And frankly speaking, I think I like bar charts better. But you can see there is a gap on the bar chart, right? The candle closed here and then beep, the next candle opened up there. And the price never came back and filled that in. That is a hole on the price chart. No ifs, ands, or buts about it, folks. So would I expect price to maybe come back and trade back to that level? I think so. I think that's realistic. It's interesting how you don't really see too much here. Everything looks pretty clean. I mean, there might be a little... And that's not much, maybe like a tick. I would probably consider that filled, but that's a hole. I mean, no doubt about it, right? And price never came back. So there's a hole on the chart right there. We'll go back to the candlesticks because you guys love them so much. But, just try and remember, if you see a pattern like that, this candle, because it's red, it actually closed there. So let's see if that would have been a half decent trade location for you to pay attention to. Remember, that's Brian's favorite fib right there, right? Look at that. Oh my goodness. And do you see how cliche this is? Look how they slammed it right down into there, made sure that they closed it right at the low. So indeed, that gap has been filled in, and then it literally has not looked lower since. Isn't that incredible?